to another live Thursday from Market Stalkers, where we do a whole bunch of stuff with order flow, teaching you how to trade properly. So today is another Q&A, another day, another Q&A. At some point, we're going to be joined by Roderick Casilli once again, and then we're going to get on to a whole bunch of questions. Oh, he's here already. There he is. Hello, Rod.
Hello. Let me just
Yeah, take it on.
Audio output. I want to be this. All right. Got a fancy new computer here.
Oh, it's all set up, is it?
All right.
You're all set up, yeah?
Yep. Somewhat. Can you hear me okay?
Yeah, hear you very
All right.
well.
Awesome.
Thank you.
Good.
Yeah. Okay. So markets, ES has been stuck in summer trading mode today. Very boring day. Stuck in a range, responsive day. Nothing unusual there.
Yep.
Gold, there was a bit more action. We had a nice move up that kind of carried through the day, which is unusual for gold, but not unusual for the summertime. And then we also had some action in crude oil. Continued move, but I actually got involved. If any of you watching now were on my members live stream, I was talking about fading this auction, so I did that, and it was a pretty quick trade. A little bit choppy, not the most comfortable trade, I'll be very honest, but we got there in the end. Rod, how did you find today? What's been happening in equities and bonds?
Yeah. Pretty slow, but nice rotation. Just we traded a really narrow overnight range, and then we've continued to just sort of what some people would call churn, but churn works well for what we do. So yeah, just a little bit of up down with no key direction. The moves have been pretty swift though. All of a sudden, some sellers come in and just jam the NASDAQ down 60, 80 point handles in 10, 15 minutes, and then they reverse it right back up.
Yeah, that was reflected in ES in a slightly less crazy way. So there was 14 handles down, and then I think it was 13 handles up. So yeah. But that's again typical for the summer. All right, let's see who's in the room. Guys, give us a little hello. Whoever is currently watching, I'm sure we're going to get loads of other people because they keep kind of coming over the next hour and a half. But yeah, give us a little hello, and let's see who's in the house, so that we're not lonely. My voice is terrible. I've for some reason I've gone half hoarse. It's like really quite. I don't know what's happened. It's probably just tiredness, a lack of sleep, and all that. All right, we've got Soup Kitchen Jim. It's a nice name. And Sean. Oh, okay. Hello. Welcome. All right. Let's see. Just check that everything here is set properly. Just give me 1 minute. This is live, so naturally there's going to be a few things that I have to keep on top of every so often.
Yeah, the S&P profile today is a thing of beauty in terms of the volume profile. We call it an Indian arrow. It just it tapers off at the top and tapers off at the bottom, where you could, whatever you want to call it, auction ending, and then just continues to gravitate right towards the VPOC, which is right around 41.55 today. So want to take a snapshot of that. If you are into volume profiles, this is a perfect example of a single distribution for the whole trading session, which we don't get a lot. We're getting a lot more double distributions, where price will move outside of the overnight range pretty substantial or dramatically, but not today.
Interesting. Yeah, so it's very thick profile structure in the middle, even on the TPO profile as well. I can see why you call it an Indian arrow.
Yeah, that's just the name that we give it when it forms there. And if you get two of those, we call it a standing camel with a low volume node in between and another volume distribution somewhere else. But today, just an arrow.
All right, very nice. We like that. All right, we've got Daniel Wyatt from Illinois, Cary, Illinois. I don't know where Cary is. All right, very good. So let me have a look at this quickly. I've noticed that ES and gold have started to unglue from the whole correlation that we've been having for the last 2 years. So that, because that, to be honest, was a little bit annoying, because I one of the reasons why I picked gold, ES, or NQ and crude oil was because the three of them were not all that correlated. In fact, when I first started trading ES and CL, they were inversely correlated, and then all of a sudden, like halfway through my career, they became positively correlated, and then gold joined them. It was like, oh, okay. So now, I had to be very careful what I'm trading and to try not to trade all of them at the same time, because obviously double and triple exposure and all of that. So that's something that you need to take note. Sean wants to know, is it usual for after hours / overnight high or low to not be tested during regular trading hours? Well, that depends what kind of a day you have. So sometimes if you have a mean reversion day, so a gap up or a gap down, it's kind of very likely that you're not going to get a test of the lows, for example, if you're going long into a long mean reversion. But it will depend on the day. If it's responsive activity day, then you're probably going to get the test. So again, it's not a yes and no answer. It has to be contextual. Rod, what's your answer here?
Yeah, I think that it's the context that I would put it in is what is the average true range or daily range that you're seeing, and if it's expansive, we've actually seen it be condensed here. So the amount of times that the prior session's highs and lows are touched or whatever is going to be a function of the prior session range, really. I mean, if it's been in context, and then how much overnight range you actually had. So it just really depends on a number of factors. The other thing is, if you have a known event, like tomorrow we have non-farm payrolls before the market opens, so that won't be. But anytime you have a big earnings like Google, Apple, Microsoft, those are going to those will generally mean that the Nasdaq is going to explore most of its range. So a lot of the time, I care only about what's really happening during the cash session as opposed to the overnight range. So all we do with the overnight range is it helps us inform whether we want to start trading right at the beginning of the cash session. The lower the overnight range, the more time we want to wait before we start trading.
Yeah, I think a lot of people put far too much relevance on the overnight highs and lows. I've actually seen that even when I was doing prop trading back in the day, there was a lot of talk about Asian highs and Asian lows. But guys, we're talking about products here that don't really trade all that much overnight for the most part. If you're talking some other asset classes like Forex or something that you'd expect to be a little bit more active overnight, that's a whole different matter. But we are talking products that are the most active during the American hours, during the cash session or NYMEX or COMEX hours. So putting way too much emphasis on overnight highs and lows is just not something that I even take much note of. I take note of the moves that might have happened overnight, and like Rod said, when the market opens, it gives you a very good open sentiment idea of an open sentiment. So whether for me it's in the form of whether the inventory is long or short overnight, and how long and how short. Because if something goes too short, that's usually a cause for a mean reversion trade, which can happen pretty early in the session. But if you have something that's been in range and only in slight imbalance at the open, your overnight lows and highs are probably not going to make that much difference. So yeah, it's a good question though. Very good question to ask.
Real quick, I think it's also important to define overnight. Like, is it from the 6 p.m. reopen Eastern Standard Time for the stock indices all the way through what period in the morning, the cash open? So how I define it is from that period, from the 6 p.m. because I'm mostly a stock indice trader. So we take that 6 p.m. and then I measure it to the 8:30 Eastern Standard Time. The reason I do that is because significant news will come out right at that 5:30 candle, right? So I don't measure. So that is the overnight for us. So I want to know what was the range there. Also, it's interchangeable with the term Globex. So either Globex or overnight. The more recent price action, if we've seen a couple tests of a level within a few hours before the cash open, that's much more important to me than what might have happened 6 hours earlier around midnight. Does that make sense? So, because at that point, New York is open, London's been trading for a while, the UK's been trading for a while. So those levels are much more important. So Dee talks about it all the time too. You got to talk about time of day, even within a long overnight period as well, because there's going to be times in that overnight period that are much more important than the middle of the night, for instance.
Oh, absolutely. I mean, you have a concept that I teach called the Frankie fake out, because a lot of my traders trade Eurex and they trade DAX as well. So that's very, very active during the London session. But technically, it starts trading on Eurex, which is 1 hour before London session actually starts. So there's this price behavior that happens called the Frankie fake out, because Frankfurt Exchange is where Eurex is located. So we call it the Frankie fake out, because you usually have moves that are kind of going the opposite way to what London will eventually do. And a lot of people get caught up in that kind of fake out breakout that Eurex does. And then London comes in with its massive volumes because it's a bigger exchange, and suddenly everything starts to go the other way in much more volume. And that's the same thing that you kind of see when you're talking London into New York overlap. It's the same thing. So you have to obviously keep a close eye on some of those crucial times of day. All right. Gold might be turning around here finally. So something interesting is happening. Let me just focus in on that. There's the average session range that has been exceeded now. It was exceeded about an hour ago or so. And the price seems to be turning around there. So I might want to pop in a little short. I love my fades towards the end of the day. That's like something that made my career. It's like, well, who's doing what? D is fading the move at the end of the day. Ah, yes, of course. So let me just pop that in. These million platforms. Okay. Okay. Got a little trade in. Away from the round number, stop loss is 1813.3. So we'll see whether this has any traction into this last hour of trading, hour and 15. But yeah, usually average session range exhaustions, that's the concept that I teach. It's kind of like a twist on the average true range and average daily range. I only use the session ranges, so the regular trading hours, or the electronic trading hours. It really depends what you're trading. But yeah, so I use just the regular trading hours for the product. And then once the market reaches that, statistically, that means that you have a very high probability of the market going the other way. So I see way too many people just doing random trades in the middle of nowhere and having no real reference points. So that's one of the things that I really work very hard to move people away from. So rather than just going, oh, I think it's going this way, bearish engulfing. No, you have to have a reference, like a level of reference. And then you can look for whatever signal you're going to look for. So, yeah. Do you see anything obvious on equities? I personally don't. It's still staying.
No, it's just a great rotational day. So right now I'm trading the Nasdaq just between VWAP and 1 standard deviation above it, which we would call the bottom of our offer zone. So we're just basically trading between 274 and 307, 274, 307, back and forth. It's great. And the S&P is doing the same thing. 41.45, 41.58, 41.45, 41.58. So
yeah, range trading was never really something that I excelled in, and I still I can't say that insight days are like my best days, because they're not. But yeah, I have, like, that's one of the things that you should do when you're working on your skills as well, to identify where you're the weakest, and then to see how you can improve that. Because I was naturally a very good reversal trader and very good momentum trader. But then every time we had a responsive day where the market was a little bit boring and stuck in a range, I would always miss my entries. Like I could see the range, but it's just that at the time my skills were not high enough to identify the top and the bottom range, and then to basically lean on that rather than still look for some massive breakout in momentum.
Right.
So, yeah, it was a very very interesting journey. Brad, did you have any kind of issues of that sort when you were developing?
Well, sure. I mean, I mentioned today in my room that I'm very guilty of even level hunting or signal hunting. You know, when things are boring, I start looking back at, you know, the profile from 3 days ago and trying to find a level in it. You know, it's like, oh, I can do this here because VPOC 3 days ago was this
Yeah.
level. But so I think we're all guilty of that. But I mean, that's why we do this broadcast, is because it's just showing different styles. I mean, for me, um, my P&L dramatically increased. I started trading this style like 12 to 15 years ago, but when I finally learned to stay away from outside days, especially outside day up, to just do not short a breakout on the upward side on any stock indice, my P&L increased massively. So you just have to understand when the conditions are suitable to your model, and one of the easiest things to do is just use, you know, inside or outside days, because those are just where prices decided to stop that prior session. So
Yeah.
yeah, but I'm still you know, the number one question I get asked is, you know, how do you know days in which it might trend and not give you any kind of mean reversion to allow these trades to work out and be profitable? The easiest one to know is don't do it anymore if you're outside day. If you started
Yeah, on
inside
equity.
and in equities, and the market got outside the prior range, you're done. You're done fading that. If you're down money, you just shut it down and go take a walk.
Yeah, I've had a load of people coming to me for coaching. They got absolutely slaughtered shorting equities. And I'm like, well, but
Yeah.
why? Why did you short? Because, you know, when you're working with things like profile, you can have these invalidation conditions. So not just, oh, this is my trade setup, let's just trade it. Profile and TPO, it's probably the only concept out there that can show you quite blatantly when you're wrong. And I think that's a lot more important than, oh, hey, here's my level and price action, I'm going to go in with that. It actually revolutionized my way of looking at the markets when I was able to go, okay, so I am looking at this level, but what is the profile doing? Do we have, so if I'm looking at a reversal, and yet there's like single print trails left on the profile, which indicates a very strong move, just don't go against that. Like it was a very simple way to just go, okay, maybe I should wait a little bit before I jump in with the opposing entry. So, you know, just like little things like that you have to work on systematically. Eventually, they do pay dividends because you grow as a trader, you start to understand what you're good at, what you're not good at, and you move away from that. I call that the wishful thinking trading. It's like, oh, I think it's going to go this way, and then it doesn't, and then people just keep they stay biased. They stay very, very biased and directionally. So that can destroy you completely. I'm never really biased. I'm very open to both sides of the trade. And if something is not really working out and kind of starts going deep into my position, whether slowly or quickly, because I know, Rod, you have your graceful exit. So that's like if it quickly goes against you. But for me, even if I've sat in a trade for about half an hour, 45 minutes, and the trade kind of goes against me very slowly and gradually, I will still take it off when it's like minus 0.5 R, because I just don't want to hold that. It means I'm wrong. And even if I'm right at some point in the day, well, right now I'm wrong. So it doesn't matter, right? You can always wait and then maybe enter again when things are a little bit clearer.
Right, and the more mechanical you're able to do that, the better. And eventually, you can get to the point where it's a feel thing. I know, D, you talk about time and trade, right? If you're just in a trade, you want things to work dramatically quickly, and if they don't, then you have a feel for how to just sort of take them off, regardless of where they're at in the market. Yeah, what I do is tell people about this graceful exit, which is the ability to just understand that if it went against you quickly, those are ones to be impatient with. The way to actually turn that old adage of cutting losses and letting winners run by having a trade management approach that you can use and use consistently, and then not worry about what happens with the trade afterwards. It's done. Exactly. Just let it go. Yeah.
Yeah. JJH wants to know, wondering if you can talk more about the bronze program. Is there lots of examples of setups in pictures and or videos? Well, the bronze program, yes, there are examples, but Silver Plus is really the one where you have the live trading archive, which is a practical demonstration of the method. So I basically spent some time recording myself and my trades that I was doing and talking you through it. I've also managed to kind of to speed up the parts where things might be boring, because I spend sometimes I spend about 2 hours in a trade. So obviously I don't expect you to sit through that in real time watching a video. So I did work very hard to kind of speed up those things and then just kind of let it run when the big things are happening. But yeah, that's only in Silver Plus. Bronze is really kind of like a basic thing where you have lectures and you have the core curriculum, which is pretty detailed. And I explain, like, it's not necessarily the you're asking about examples of setups. Like, the best example of setups you can have is to look at what systematic conditions I've given you and then go into the live markets and see them for yourself. And, the live trading archive is there to show you how I've done it, but there's like a million other ways you can do it. Once you have a condition for an entry, let's say the price goes back to the first hour of trading after testing outside of it, that's a very solid condition. So you don't need to have an example of that. Anyone with a pair of eyes can see that, right? So it's just the execution of how I do it versus how you're going to do it also might not be the same. It might be helpful to see how I do it, but it doesn't have to mean that it's like be all and end all is the only way. However, bronze doesn't have that. Bronze is just the lectures and me talking. Yes, there's lots of examples. There's probably about like 30 or 40 hours of training in there to actually go through. So there's a lot of material. But when it comes to live trades, that's what the live trading archive is for, okay? Daniel Wyatt wants to know, what prop firm would you recommend? Rod?
Oh, wow. This question comes up all the time. So right now, the prop firms are somewhat platform dependent. They're ones that support both, but for the most part, they are either Rhythmic, which the primary platform is going to be Ninja, or many have now support Trade8, which is also owned by Ninja. So if you're on a Mac or you prefer web-based platforms and mobile, which is Trade8 and also a connection to TradingView, then there are two firms, one called Trade Day and the other one is called Elite Trader Funding. So that's platform dependent. If you're comfortable with NinjaTrader, I would suggest either Apex Trader Funding or Earn to Trade. So those would be there. There are many others that are fine as well, but many of them are starting to look like sort of also rans. So if you like Ninja, Apex, or Earn to Trade, if you are into Trade8, check out Trade Day or Elite Trader Funding.
Yep. All right, so I'm going to take this off because I'm not seeing what I want in gold. By now, it should have turned around. So as you can see, can you see? Let me have a look at the streaming platform. I need another screen here. Okay, so gold is continuing up. That's not what I wanted to see. So there's the level of reference, and it should have just carried on into a reversal. It didn't, and I don't like what I'm seeing here. So I'm out. This is minus 0.5, 0.4 R, so it's not the full 1 R. I'm not going to sit here and wait for it to hit my full stop loss. That almost never happens. Unless the market really moves fast. I very, very rarely take minus 1 Rs, okay? So I'll make that perfectly clear. All right, so Daniel says he's comfortable with NinjaTrader. So then Apex would be a good one.
Probably Apex, yep.
Yeah. I like Apex. They're pretty cool. Yeah. Ocean Blue says, D, if you're going to trade your system, but as a new trader and had a 25K Eval, 1,500 drawdown and 1,500 profit target, how would you structure your trade risk size when would you start adding contracts to trades? Well, that's a very achievable target, even if you like trade just one micro. It adds up. I wouldn't necessarily add to the contracts in the evaluation that is so tight and small, simply because you will always be, especially if you have a trading drawdown that keeps trailing, very important. So if it stops at 0, maybe you might be able to add another one towards the very end of the challenge. But personally, I would just stick with like one micro and carry on until you actually get there. Because the way I structure my risk, I usually use a stop loss of about 35 ticks. Obviously, it varies depending on what I trade, but generally on most things, that would be my risk. So that means whenever you get 2R on the trade, which is something that I use as a default take profit target for intraday trading, you would get $70. So that would, that would amount to quite a bit if you're doing like 2 to 3 trades per day. So you would get there in about 10 days, maybe 20 days if you're really making a lot of mistakes and you're not being disciplined and you may be trading more than 2 or 3 trades a day. But with such small challenges, you really have to limit the amount of trades per day, because there's no room like for mistakes. If you overtrade, it will eat up into your drawdown. You don't want that. You want to build a little bit of buffer, and even then, the trading drawdown makes things a little bit difficult. So personally, I would probably go for the 50Ks, not the 25K. Rod, what are your thoughts about this?
Yeah, I mean, I would agree. I think that the 50K is better. There's going to be some silly sales coming up. Maybe some people are aware of that tomorrow from a firm like Lilu is going to offer 25Ks for like $8 or something like that. So, if you want to YOLO on it, 50K has a better amount of buying power relative to the drawdown. So what I generally say, and D's instruments are a little bit different. I imagine it would be with MGC or MCL if you were talking about a 25,000. I would just only use the Dow, and because the Dow actually would allow you to add contracts and keep your risk within something that's even less than one Nasdaq, because the average daily range for the Dow is less, and it has not the same beta. So you can start with 1 and then look to campaign up to 3. That puts you $1.50 per risk per point. So that's what I would suggest, is the instruments are really important to think about when you're first starting out with these. If you're not familiar, the one thing you should not look to be doing if you're trading at 25,000 is using the Nasdaq. It's just going to be too volatile for you for that amount of risk.
Same thing. I would say same thing for crude oil at the moment, because it's got a very big range. So if you get it wrong, it's just you're not going to have enough room. So for the 25Ks, I would say MGC, so micro gold would be the choice. Yeah. Ocean says, who's the bigger IQ genius here, Rod, D, or the puppies?
I barely made it through California school, so it's certainly not me.
Yeah, I do. I mean, I used to have a pretty big IQ, not quite high enough to get into like Mensa or something, but it was like 144 at one point. It was crazy. And then I had a traumatic brain injury in 2018, and things changed a little bit. So I'm probably not as bright as I used to be. Christian says, hi, Dee and Rod. How were you? And how were you? And Rod's trading day. Is that two questions or just one? So
how are you, and how was your trading day?
Yeah. Or how was mine and Rod's trading day? I think maybe that was the question. My day was okay. I did 3 trades with this gold one. So the first one was a gold long. I didn't catch all of this, but I caught a pretty good run there. And then I also did a crude oil trade. Sorry, it was 4. I did an ES trade in the member session, another crude oil trade, and I just did another gold trade, and that's me done. So out of all of those, gold one was the one that had minus 0.5, crude oil got 2R. The first gold one, I think it was 1R. And then the ES was just 0.5, nothing much to talk about. So it was okay. Not the easiest day. But yeah, I mean, it was summer trading, so perfectly normal. Rod, how are you and how was your trading day?
Today's really sleepy compared to yesterday and the day before. So I've been having some really big days with the bonds. Yesterday, Bullard was chatting away right in the morning, and I got a little bigger than I wanted to, but that reversed really nicely. ZBZN, ZF, I had the whole complex. I had some options. Caught it on the way down, caught it on the way up, mismanaged it really poorly over the last 10 days, leaving $20,000, $30,000 on the table a couple times, but still doing well. So relative to that today, across everything, I don't know. I trade a lot more than D does. I trade 12 to 18 markets. I have modeled portfolios running. I know D doesn't really talk about any of her automated stuff, but if I added it all up, it's been a fine day, but very, very minor in terms of volume and size relative to the last 10 days or so.
Yeah, I mean, I don't talk about that because it's way too complex. We have 27 algorithms, and I do work on switching on and off some of them throughout the year, depending on what kind of market conditions we have. Obviously, not all of the strategies will run throughout the entire year. That is the job that I do in Blahtech. But yeah, I'm not even going to go there because it's just going to go over most people's heads. So there's no point.
One thing I can say about it, and I mentioned this in my room, and D, I'm sure you probably recommend, is be very leery of buying anything from anybody. What you can do is eventually learn to take what you've done. It could be a strategy for me or D that you learn to trade discretionarily, and then you can automate it yourself. But then you understand the rules. You understand how to calibrate it. You understand how to size it. You understand when you might want to run it or not run it, right? So just that's my only thing with automation or semi-automation. I think it's a path that many traders can get to. It's just they want to get there by buying some magic pill from somebody, and that's just not going to work.
Yeah, there's another problem with buying something from someone is because this assumption that just one algorithm is going to be enough throughout the entire year, and you're just going to run it in all market conditions, and it's going to perfectly work. It's so unrealistic. In fact, that was one of the mistakes that I made going into algorithmic trading, because I wasn't an algorithmic trader. That's not my background at all. I was a musician, right? So I'm very pattern based. So my idea was, and I can't code. I'm not the best coder in the world, but I'm very good with utilities and stuff, and just basic ideas of what I want the levels to do. So I'm excellent for that. But anytime anything complex and you have to call another module from here to over there, just forget it. I have a team that does that. So I just tell them I want this to do that, and then they go off and do it. So I will never claim, I know my place in the world as a coder, so I will never claim that I do everything by myself, okay? But one thing that I've learned is that when you're making an automated trading system, don't overfit, don't over-optimize, don't have a million conditions and then go, oh, yeah, time of day and price pattern and one level and then another level and then turn that into another trade on the opposite side. Don't do that, right? That's never going to work. The way algorithms should be done is to take one trading idea, one setup, and then code it around that. That's it.
Yep. And focus first and foremost only on the entry logic. That's what computers do really well. Yeah. You don't miss anything. They have all their inputs and they take the trade.
Yeah.
But also to Dee's point of curve fitting, overfitting, just constantly recalibrating and all these kinds of things. We started with something called level 2 as opposed to level 3, where all it is just putting you in the trade. This is how a lot of other prop firms in Chicago and New York used to work too. They would put they put 50 traders in the same trade and then see how they manage that trade. So the algorithm puts them in the trade, and then they want to see how they manage the risk around it. So you might want to think about that too if you start with those kinds of things, which is the hardest thing that I've ever found is all the dynamic trade management. If you're trying to code that in, it just adds infinitely more complexity than you need, right? So
yeah.
You can just
Ocean Blue says, Rod, you are very sharp. Easy to see that. No doubt about that.
All right, checks in the mail, even with a low IQ.
Yeah. So SH wants to know, how would one trade today's garbage in ES? Well, it's not really garbage, it's just a range day. Also, do you expect a rally into session end? So Rod, you should probably answer this again, because I don't think SH was there when you were talking about this. There is a way. Rod is actually very good at trading these.
So in terms of the current session, which is a rotational, it works really well for our trading style. We have just standard deviation bands. They can look a little bit like a Keltner or whatever, a little different than a Bollinger, but they're just standard deviation bands. And when they stay within that, first of all, the first thing to know is that 78% of price action during the cash session, 390 minutes of the cash session, takes place within 2 standard deviations of VWAP. So if you can work with that all the time, I'll take that, and know that when it goes out of those ranges, it has a probability of coming back. Now, from what price? So this is actually really good for what we do. I like this kind of rotation. In terms of what could happen in the close, today is a nothing burger. Yesterday, I was putting into our Discord that if go back and look at yesterday, if anyone was short yesterday or trying to fight that trend, those are days where you could just see them frying the toads, constantly retail. And how I see that is I have something that just parses the tape meaning the time in sales.
Mm-hmm.
And I can just see when small traders, anybody trading less than 10 contracts in the S&P. And yes, that's a small trader to me. If you're trading 10 contracts or less, you're talking about most of these people on the demos, those aren't even showing up in the time in sales. So anyway, yesterday was a day where you could see that there was going to be some stop runs all the way into the market on close orders at 10 till. And that's exactly what they did. They fried it all the way up, and then we reversed for about a teeny bit right at the end of the day. There are some days where you can see that happening. Today, it's just, there's nothing there. It's probably going to be full of sound and fury signifying nothing. We'll close right around where we're trading right now.
Yeah, yesterday was a very because I was watching ES yesterday. It was a very very normal sustained auction higher, and it was very, very clear to see. In fact, when I was in your room, Rod, it actually closed one of the 30-minute periods outside of the initial balance, and it kept going. So once you see that, unless the price returns and closes the next 30 minutes back into the balance, into that first hour of trading, it's a sustained auction. Don't fight it. That's your momentum trade. Go in. Stay with it, That's the kind of mechanical decisions, the binary decision process. Yes or no. Is it up or is it down? There's no in between. And when you see something closing outside of the first hour trading range, especially if it's an equity index, that's your direction. That's your direction. Just go with it.
Go with it or don't fight it. Either one. I mean, I often talk about style drift, right? I mean, you want to be good at one thing first, right? And everyone wants to try to perfect, hit every club in their bag with the golf analogy. And eventually, yes, that's your goal. You got all these sticks, and you want to hit each stick well, and you want to putt well, and you want to chip well, and you want to drive well. But you gotta start on the fundamentals. If we take this analogy the whole way through, you gotta be on the range and just get your swing down first, just the mechanics of your swing. Whatever club's in your hand, you got to get the swing down first. So Dee's mentioning, when you can see or be able to eventually identify a move like that. But the other thing is identifying when not to do something as well, because a penny saved is a penny earned.
Yeah, Hogue actually has a saying for that. Sitting on the sidelines is also a position. He always says that.
Flat is a position.
Yeah, exactly.
Yeah. My dad used to say, never miss a good opportunity to keep your mouth shut.
It's a good saying.
Yeah.
Tony Lyons, a bit of a cryptic statement there. Sometimes I wish I could fade myself. Have you ever felt that way? Probably years ago. And how would you even do that? So no, I don't think I ever felt like I wanted to fade myself. But if that's something you're struggling with, you might want to seek a help from a professional, not the trading professional, but maybe a shrink or something, because it's not really our area of expertise. We do a little bit of psychology, but that sounds way too deep for me.
I would say that it sounds like a confidence issue, right? Or that you feel like, well, I don't know. I mean, it's hard to read into a comment. Yeah, to fade. I mean, a lot of the Forex firms do that. They they trade against all their customers.
Oh yeah,
So, yeah,
exactly.
I mean, they know that their customers are almost always wrong, so they trade against them. So anyway, if I'm reading too much into it, what I would say is that I practice this thing called the miracle equation, which is that you need to start with unwavering faith that it's possible. So that's why Dee and I are investing the time. We just want to show you that it's possible. Not it's improbable
Tony
you're going to make $1 million next year or to quit your job or even be full-time traders like that. That's probably not probable. People don't want to hear that. But not losing your ass.
Unless you start with like $500,000.
Yeah.
So,
But not losing your ass or not feeling like you're defeated all the time or you want to fade every move you do because you suck as a trader and you should give up. That's what we're here to try to help people.
So Tony said, I meant fade my trades.
Yeah, that's right. That's what I thought, which was
well,
do the opposite of what you do. I can answer that. You're in the market at the wrong places. If you have higher probability entries, you won't be seeing that as much. You're just over trading and you don't have
where I'm fading, where I usually fade, is around the extremes of the ranges. So for example, average session range or average daily range are very good areas of high probability reversals. So that's where you should look to fade something. Another area where you might want to look to fade a move is the value area edge from the outside. So if the market is open outside of value and then it tests the value area, that's the high probability reversal. So it's the right time of day, because time of day is a level, then you can try and fade it. But don't just fade any move. If, like, for example, the crude oil, it kept falling yesterday, fell today, and I didn't fade it until it hit the average daily range. It exceeded the average daily range. That's when I got interested in fading it, not before. So like Rod said, you're probably getting involved in the market at the wrong areas. And you have to use the levels that work. There is this belief that markets are random. They're not that random. Everybody uses the distribution curves. Everybody uses statistical ranges. We have a lot of algorithms running the show these days. We have 80%, maybe more, 84 or 5% of the markets today are traded by algorithms. So what are they going to use? Certainly not discretionary methods. They have to use some kind of reference points, just like you and me. It's just they're mechanical. So they do it all the time. And then a lot of these firms, they have a lot of buying and selling power. So they do have an effect on the market as well. And all you're doing is trying to pinpoint those areas that they're using and get in on that, because you're not going to be able to move the market. Maybe, someday in the next 10 years or something, if you open up a hedge fund or something, but don't, because that's yeah. Anyways, Christian wants to know, do all your Blahtech indicators have algos built in or not? No. So Blahtech indicators are tools. They're not algorithms. They're just utility tools that we actually created because we were creating algorithms. My algorithms are not really for sale for you guys, because for most of the people, they're way out of the people's price range. And that's actually a Blahtech model, not my model. So we share that cash with a number of people who are part of the Blahtech company team. We usually have at least 3 or 4 algorithms that are licensed by somebody else. And, they decide whether they're going to switch it on or off. We don't. We just license the algorithm and they do whatever they want with them, right? Because you can't have just one algorithm and keep running it forever and ever and ever, because, again, that's not how things work. Okay, I'm just going to make sure that everything's flat here. Okay. Sorry, I just had a random order that kicked off. I just forgot to flatten things. So Luis Alvarez says, Rod, it is all your fault. I blew up the account. Lol. Joke.
Yeah, it is, for sure.
Yeah. DA says, video froze on him. So hopefully you're back in. Blanco says, in regards to the fading yourself, get a bulldog. That's a good piece of advice. Ocean Blue says, Rod, do we have free access when D is in your trade room for the day? Probably not, I'm guessing.
Do you have free access when
I'm talking on Wednesdays? I think that's what he means.
No, I don't.
No.
I don't. If you're on trial or you have access to the room,
Yeah.
then you can be in there. But I don't send out a special. I don't
Yeah.
send out a special thing, except for one day. It was a Fed day, so she was in there on a Fed day.
Yeah. But again, Rod does these free look. What do you call them? Free look Fridays or
Free look Friday sometime, or a free look Fed day or something like that.
Yeah. But yeah, if you want to check Rod's room out, it's really quite a lot of value, and you should definitely check it out. Just do a trial, see how you get on. I think you're gonna get a lot of value from just hearing and seeing what Rod is doing. So yeah, definitely recommend that. Simon K, can we calculate your average session ranges manually and apply them in the same way you use ADR? What is the calculation for the average session range? It's exactly the same like average data range, only you use RTH and then you dynamically track it. Now that's the hard part. Yes, you can use Excel, and then you're going to have to track the session highs and lows as and when they come up, because it is not, 100 times I've said this, it is not a static measure. ADR and ATR and even ASR, they are dynamic measures, okay? So you can't just go, oh, hey, I'm just going to flop in ADR high, ADR low, or ASR high, and that's it. It's not like that. Like as the market moves up or down, it will move where the average high and low are located, because the calculation is really previous 10 or 14 days plus or minus average, plus or minus session high or session low, depending whether you're going up or down. So every time the market makes a new high or a new low, you have to recalculate. So if you want to dick around with that in the day, yeah, do it manually. But, we do have a pretty affordable, cost-efficient Blahtech DR that does all of it for you. So, yeah, for the sake of, I think it's like $49 or something like that. DA says, what is the norm to see open range? Is it on a 1 minute or 5 minute? Okay, I have a problem with the open range thing, because that's one of those market profile concepts that just don't work anymore. So I don't really care whether it's 1 minute or 5 minute, but from what I remember, it is on 1 minute. It's the first minute of the session trading. Unfortunately, that's something that stopped working, the whole open types. So I don't even teach that anymore, because we tested all of that and it doesn't work. So markets have changed, newsflash. But there are a lot of other parts of the auction process that are still very, very useful, just not that. So yeah. Ocean Blue says, these indicators are extremely well written, massive functionality and flexibility. They are all worth it, easy. So again, Ocean Blue, checks in the mail. Rod sent you one? No, I'm sending you
one. You're gonna get money Zelled to you all over the place.
Simon K says, would love if you can make that Blahtech indicator for Sierra chart. That's never happening. Sierra is literally like Excel on the back end anyways. And no, we don't like Sierra, unfortunately. It's not really... all of the calculations that they have in there, they're slightly off. So I don't know who they have coding stuff. Rod, you might know. But literally every single indicator that I've looked, it's wrong. Like the calculation is not right, unfortunately. I mean, I don't know how they can charge what they charge for that platform. Like literally a glorified Excel spreadsheet. Karuba TV says, hi. How are you? DA says, thank you. We'll throw that out the window then. Lol. Yeah, so anything that anything that you have that focuses on super small time frames and it doesn't take in the larger picture, at least like a 30-minute or a volume profile or TPO profile, just don't use it. Like maybe you can have a look at it once you've had years and years of consistent profitability. And then you get to a point, hey, maybe let's see if I can optimize my own entries. That might be okay. But if you're just starting out, staring at an open range that's taken from 1 minute of the most noisiest period that you can possibly have in the entire session, that is not the way. In fact, most of the losses that people incur when they first come to me, we look at their data analytics. That's the first thing we do. And they post their results all of that, like 90% of their losses happen in the first hour of trading. So it's like, why do you do that to yourself? There's so much volume. If you don't know what kind of a day you're looking at yet, just don't, like, wait until things have settled down and then decide what you're going to do. Brian C says, would your indicators work on TOS? No, they work on MetaTrader 5 and MetaTrader 4. What I would say is to use them for charting, because I don't necessarily use the MetaTrader 5 as like my main trading platform. I have like 6 different accounts with various prop firms, and everybody wants executions to happen on a particular platform that they assign you, whether it's Ninja, whether it's Bloomberg Terminal, whether it's some other Fusion or whatever. So it's completely pointless trying to carry all of your charting with you whenever you change an execution platform. So I would just say, use MetaTrader 5. There's an AMP futures demo, so it's free. Platform is free. The only cost you would have would be the indicators. So, I really don't see what the obsession is. Like, people are like, oh, I'm using a new platform. I have to change all of my charting now. Why? It's the same chart. It's the same products. They're all standardized in futures. You don't need another charting software. Just, stick to one. Ocean Blue says, D or Rod, do either of you I've turned into northerner now. Do either of you use VIX internals? So I know you use VIX, Rod.
I don't. It doesn't really inform my my futures day trading, no. But I'm aware of the volatility of so if you're speaking specifically of VIX, which measures the the front month of calls and puts on the SPX, yeah, I'd use it for my options trading, but it's not really that informative or important in my futures trading.
So that would be a no.
Yeah.
Yeah, so I'm sure there's one on MT5 if you really want to have a look at it. I've never used it, so I don't really find it essential in any way. The only time I used to use them was when I was a little bit more into options trading, but that was a while back. So no. Okay.
If anyone's familiar with my stuff, we got a really nice double test of 344s on the MNQ, and now back inside range. So that was a nice either target or first area that you would look to short. We talked about could be a boring close or a fade up close or anything. Who knows? But yeah, we're creeping up a little bit here.
Very nice.
Let's see here.
Just gonna make sure that's done. Okay. Right, back to questions. D, you just said wait for the first hour of trading to see what kind of a day it is. I see Rod does trade the first hour and you both are doing well. I find that interesting. Yeah, that's because we trade slightly different markets. So Rod trades a lot of the equities and bonds, which generally have a bit more of a clear trend, and they can be less choppy than some of the stuff that I trade. I am mainly a commodities trader, so I trade crude oil and gold as my 2 main markets. And with those two, it's just a little bit better to wait until the market does its thing during the first hour, and then to have that high probability trade happen after that. By doing that, you also avoid that randomness of the first hour of trading. But even with equities, you can't trade that first hour every day. There's only like certain days, like Rod can tell you a bit more about that, but there are certain days where you can actually start trading right off the bat. However, on some other days, that's also not such a good idea. So, Rod, why don't you share a little bit with...
yeah, so I have a guideline that I talk about every morning. And by the way, I refer to these as guidelines in context, not hard, fast rules. The only rule you have in trading is Buffett's rules of 2 rules is don't lose money and then refer to rule number 1. That's basically it. That's your rules. But yeah, we keep it pretty simple. There's an indicator, the volume profile indicator on Ninja will measure the what we were talking about before, the overnight range from the 6 p.m. Eastern Standard Open all the way through to 8:30 Eastern the next morning. And if that is less than 50% of a 7-day ATR, then I will advise, or I would say this is a opening half hour or hour that you may want to sit on the sidelines and wait for the market to to expand, for volatility to expand, for levels to potentially be touched. Again, it's only a guideline. As you advance in your skill set, some people can take advantage of the randomness. Dee was just mentioning, I think we have slightly different thoughts on the randomness of markets. I feel they are a little bit more random, and and they're more random because actually the algos are all battling each other now. They don't know what each other's doing. They have their, but the lower your time frame, the more random they are. So the more noise, and if you're looking at the first minute or 3 minutes or 9 minutes or 15 minutes, that's going to be more random than the more time you give yourself to see if levels have validity for that time period. So basically, take a look at the overnight range and how much of that is reflected in the expected range for the day.
Cool. Simon K says, you can view the full contracts with AMP Futures MT5, or is there a workaround? No, you can. It's just a different server. It's called AMP Global USA, and that offers full futures contracts. So you just have to open up your, I think they do a demo. So AMP Global USA -demo. So that's free. There is a Blahtech instruction manual that I'm going to share. I think it gives you a direct download to the MetaTrader 5 as well, if I'm not mistaken. Yeah, so I'm going to share that in the chat now. There you go. So if you click there, you will see the step 1 shows you the download, and it tells you the name of the server. So, yeah. Soup Kitchen Jim wants to know, Raj, what are your thoughts on trading the hour before the close? Volatility seems to be higher during that time. Well, both of us can answer that, but go on, Rod.
My thoughts remain the same. Time of day is important. So if it's a time of day that you can trade, absolutely, closing ranges are fine. There's seasonality too. So right now we're entering the summer. We should likely see more slow days and sleepy closes and not a whole lot going on. Of note, I chose to put on some put inventory in all the indices I mentioned that in my room today because I don't think it's really reflected. August can sometimes get pretty wacky, and there's some stuff continuing to handle from a geopolitical standpoint. We've moved a little bit, but basically, my thoughts on any time period are be consistent. So don't say, oh, now my work schedule changed for a week, so I'm going to trade the middle of the day for this week. No, don't do that unless you can stick with that day part, right? The most profitable day part is the first couple hours of the open of anything you're trading. So again, I'm all for it, but as long as it's consistent and you're not doing anything different, you're just taking the same levels at that time period. So in other words, you're not saying, okay, I'm going to trade the close, and the close is going to be somehow different, like +1s or -1s or +2s or whatever are going to be different. They're going to be at different levels, and they're potentially going to have higher probability, but you don't force trades or do something different than your core strategy.
Yeah, it goes back to that consistency that I always yap on about to my traders. Aim to be as consistent across the board. So if you're trading a certain time period, try to get the market behavior as familiar to you as possible. So because there is a market behavior, and for a lot of the times that last hour of trading, especially in equities, is very lively, because you have this thing where back in the day, the open outcry for bond markets used to close earlier, and then all the bond traders used to flood the equities market. So you get this uptick in volume. That's actually carried over into the electronic trading as well. So that's why you see this influx. And then there's also the last 10 minutes where you have the portfolio rebalancing, which also brings a lot of action. So if you're going to trade for that last hour of the day, equity indices is where it's at. They will have the highest amount of action. Maybe not in August because summer. But yeah, generally, you want to aim to stay consistent with the way you determine your risk, the time of day that you trade, the products that you trade, the levels that you're using, all of that. It leads to consistency. That is the whole point of this, like skills, day trading, mastering the skill. It's not about just sitting there and clicking buttons. It's about using the same orientation levels at the same time of day for the same type of products. And you do that, you'll be fine. One day. No, but you'll get there much faster than somebody who's just sitting there clicking buttons and hoping for the best. YOLOing. Chad wants to know, hey Rod, I've done a couple of your free days in the trading room. Quick question. I use TradeOvate and TradingView. If I was to join, can I make my charts and indicators like the way your room trades?
Yeah, I mean, you even without joining, you just in the room, I give you everything you need. All my stuff on TradingView is free. You can just go and watch any of the videos on that. While you're in the room, you have full access to everything. There's nothing in the PTR training portal that you don't have access to while you're on trial. So go in there and download like heck, download all the guides, all the quick hit guides and all that stuff. The one thing I would tell you is that I don't use TradeOvate charting or anything. I just use the TradeOvate domes for entry. So there, I don't offer anything on TradeOvate, but TradingView, absolutely, a lot of the setup and stuff for the signals and levels is there. And the indicators on TradingView, by the way, are all free. The indicators on NinjaTrader are free too, but you have to own the license. So that's a little bit of a nuance there. But I don't offer anything other than a couple custom indicators on TradingView that you get when you're a member, but you don't need those. They're not part of the primary strategy.
Yeah, so again, it goes back to consistency with charting. You don't need to change your charting with every new trading platform where you're going to execute a trade. Because obviously we're trying to educate you guys to go to prop firms and to do these challenges and not spend your own money on, funding your account with 10, 20, 50K and then making all the rookie mistakes. You want to flip that around. So just because a firm wants you to use Ninja, it doesn't mean that all of your charting that you've done on TradingView now has to all become Ninja. Just use the DOM for execution and you're done. Just keep charting consistent. It's very important. All right, so let's see what the time is. 8:30. Still a little bit early for a little bit jumpiness. Still in range. Equities. Gold is actually turning around a little bit. So I'm gonna give it a go again with this short around ASR, because this is now half an hour later, and we've still not moved higher. So again, that's what I want to see, the price kind of chilling around the level where I'm looking for a reversal. Whether we get follow through, again, summertime is a little bit difficult, but I'm not looking for some huge momentum move, just a little bit of a high coming off the highs. And I'll be happy with that. Fifth trade. Ooh. That's more than I normally do. No, I'm joking. There have been days when I do like 9 or 10 trades, especially if I've had, the first 4 trades that have all gone to target. Obviously, then you've got the budget to keep going. But at some point, you either need to cut the position size or you need to stop if you notice that you've lost like 50% from the high mark. I see way too many people who continue to trade themselves out of day's profit. So they have a smashing first part of the session, and then they get stupid. And they just basically are up 800 on the day. By the end of the day, they're minus 200. It's like, how? How did you manage that? Just stop. Please, just stop. Go take a walk. Actually, he's not in here today, or at least I don't think so. He had this very funny comment that he put on one of my videos. I said to people, don't rush into FOMC. Try to stay away from it. It's a very difficult thing to trade. And he goes, I've got advice for all market stalkers. How to avoid losses with FOMC. Go for a short walk and then keep walking until the whole day is done. As always, the beauty of patience, or the secret to patience, is doing something else in the meantime. Wise words. Not mine. I stole it from someone. Right, a little bit of selling going on in ES, I can see. Hopefully that kind of drags my gold down. See if I can somehow fit in both charts on the same screen here. Actually, let's put us small side like that, and then I can do this. Crude oil is usually quite boring after settlement these days. It used to be a little bit more lively, but for that last hour, it's just a non-event. So again, if you're going to trade something for the last hour, equity indices are your best bet. But frequently you have a little opportunity in gold as well, which is kind of happening right now. Now, very similar entry and stop loss as I had before. So yeah, we'll see whether that can bring us a little bit extra. See, DA likes that. Likes the FOMC advice. So I wanted to say to you guys, Rod and I usually take vacations. We take a break for the second part of August. Rod, so are you going to be with us next week for the live Q&A, or are you going?
Next week, next week is fine. I mean, I'm starting to travel, but I'll be continuing to work. But then the second part of August, no, and then the middle part of September, I'll let you know about as well. But
yeah. So I'm away pretty much from the 19th of August up to about second week of September. So it's about the same.
Mm-hmm.
Where are you traveling? Anywhere interesting?
Not. I'm gonna go to Vancouver. I'm gonna go to Calgary and to Banff. A little bit of time in Kalispell. I'll be in Vegas, unfortunately, for a couple weeks when it's hot. I don't like to be there then, but I got some business I need to do. So that's and then I'm gonna be down in San Diego for like a workshop kind of thing that I'm excited about.
I actually got married in Vegas on the 8th of August in 2015.
Oh,
We've been at that point, we were together for like 10 years, and then we decided to get married for our 10-year anniversary.
There you go.
And like idiots, we went to Vegas, like it was like 45 degrees, which is 104, I think. No,
Did you do it in like a Cadillac in one of those chapels?
We didn't, but we did it in a chapel, the same one that Elvis got married in. It was the little white, because I wanted a spoof wedding. I'm not really someone who's, oh yes, I need to have whatever. So I just wanted a total spoof wedding. And family wasn't there; it was just our friends, just the closest friends. And then we went clubbing to Omnia, which is in Caesar's Palace.
Right, that's a good time.
It was great. It was like Skrillex.
Oh, Skrillex was there.
Yeah, it was great.
Yeah,
best time ever.
That's been through a lot of iterations. Yeah.
Yeah. Ocean Blue says, D, can't you do some live feeds with mom and maybe some shops or restaurants? I can look. I might be able to do that on my IG, on my Instagram. But yeah, I'm not sure. My mom has this aversion to all things camera because my dad was actually a pretty famous Yugoslavian musician, and she spent like literally 50 years hiding to not be on camera. So I don't think she will be participating. But yeah, I mean, I can do a few Q&As and show you guys where, what my home country is like. And it's a beautiful country. Like Belgrade is probably one of the most beautiful historic cities ever. And now they have like an ultra modern area just by Danube, the river, which we've had some like Arab investors that have stepped in. So they're making this area called Belgrade on Water. Now, a few years ago, when that was still like a building site, Serbians being Serbians, we have a very good sense of humor. There were some massive floods. There's like rivers flowing through the streets. And someone said, yeah, look, Belgrade on Water. So I thought that was quite funny. Yeah, but they've actually made that part, which is kind of like, it's called New Belgrade. It's really quite pretty. It's got a mall, and then outside you can go and like stand on like a terrace and a walkway. It's really quite beautiful. But yeah. So but my mom, I'm not sure. Yeah, she's probably going to be like, no. Oh, Ocean Blue says, I want to see the countryside and the real people. You're not going to get that from me. Dude, I'm a city girl. Like, I've never lived in the country. In fact, I'm about to live in the country. I'm about to move to West Sussex at some point in the next 6 months. But yeah, even I don't know what the countryside is like. So you're not going to be seeing that. But you will see a lot of Belgrade, a lot of the suburb of Belgrade as well. So yeah. Oh, but heads up, I'm absolutely terrible at street photography. I'm great at like studio photography, but I suck, like majorly suck at taking photos outside. I don't know why. Every time I try to take a photo of a building, it's like it just doesn't look right. So I don't know. I don't know why that's not that's not a part of my talents. I've got a lot of them, but that's not one. That and chemistry, that's two things I suck at.
Simon you can get by without a lot about chemistry.
Yeah, well, I had a very bad teacher. I think she was a bit confused, or an alcoholic. I don't know. Now that I think back, it was probably the drinking. Yeah, she never explained anything to us. She was just like write stuff on the blackboard and then never actually explain it. And then she would go into her life stories, how she's a bit depressed. Like, mind you, I went to school at a very odd time. I've been through wars. So at this time, like the country is falling apart. And obviously some people's lives were falling apart as well as a result of that. So I can kind of understand where she was going from. But unfortunately, as a result of that, I'm not very good at chemistry. And it's it's one of the big mysteries in life for me. It just doesn't make any sense because I never had that basics. Simon K says, correct me if I'm wrong, D, going through the article you sent, we can't use the indicator on the demo version. The demo version of the indicator is only available on the strategy tester. So you can't, like, you can see it working in the strategy tester when you go through the visual mode, but it's not us, it's actually meta quotes. So meta quotes don't allow any demos to be used on live charts. Because there's a higher incidence of them being able to crack it or whatever. So because of the encoding and protection and copyright, they basically don't allow demos on live charts, which is fair enough. So yeah, if you want to see it, how it works and stuff, you will have to go to, I think it's Control R, and that brings up the strategy tester. And you can just set up like a really simple visual mode that literally is like a back test. So you can see the indicator printing all the levels and everything. And then there's a cheaper version to rent it. You can rent it for a month. I think it's like $25, $30, depending on the indicator. So, Simon K says, "Oh, I meant using the paid version on the demo. That's fine. The paid version you can easily use in the demo. There's no restrictions there." So yeah. In fact, most of my market stalkers who are being coached by us, silver and gold members, they are mostly using the demo on MT5 and paid versions of the indicators. So that's definitely an option. JJH says, I find myself constantly negative biased in short positions. Would you recommend I put in the work to flip my mindset to the long side as a new intraday trader? Well, that's the beauty of having multiple contingency plans. Rather than just going, oh, I don't know what's happening, I'm just long. Have a choice of 4 scenarios. So have one scenario, one level for short, have another level for long, and then you're going to not have that bias because you have 2 orientation points or 3 or 4 orientation points in my method. So that would definitely deal with the bias. Rod, what are your thoughts on this? How would you
Same thing.
advise JGH?
Just have a bid zone, have an offer zone, have an area where that's where you get short or take targets, and the opposite. A lot of the time we say this all the time, you're just in the market at low probability entries. That's all. So in our trading methodology, it's mean reversion to start, and you have an offer zone. That's where you're short. If you're short before that, you're doing it wrong. And the same thing, if you're long before you're in the bid zone, you're doing it wrong. And then you reference a higher time frame to see if there's any relevance or things to worry about if you get outside those areas. So, yeah.
Yeah, it's all skill based. So whenever your people are struggling, it means that they're not using orientation points properly, or they're not waiting for orientation points, or they're trying to get involved what I call in the middle of nowhere. Because if you're in the middle of two orientation points, that's the middle of nowhere, and it can go either back to like your offer zone, or straight down to your bid zone, like, and you don't know which side. But when you have a zone, so rather than having one single price, that's another thing I will say, have a zone. So don't have one price, like, oh, it's a high, I want to sell there. No, have a zone. Have a zone of about, I don't know, 30, 40, 50 ticks. Maybe even bigger. Like, if you're trading NASDAQ, you're probably talking handles. So have a zone of about 30 handles. You have plenty of volatility there. And then watch what happens inside it. So don't trade before then. It's the consistency in using your levels. But it also helps to create those scenarios. So whoever is on my members coaching sessions that I run earlier in the day on Thursdays, and I've talked about it in Rod's room as well on Wednesdays. That's why we write 4 scenarios. They map out the 4 areas that we want to see as potential reversals or continuation, depends on what you're looking at. And that way, you have a contingency plan for every scenario. You're not caught out just being on long and then not knowing what to do. There's always going to be a stopping point. There's always going to be a target and an end point to a trade. So you learn to use the orientation points a little bit better. Ocean Blue says, what's the strategy tester? Well, MQL actually has a way of writing algorithms inside it using their own language, which is based on C++. But it's their own language. It's like a bastardized version of C++, effectively. So you can write algorithms in there, and it's pretty powerful. But yeah, I prefer to use something else because obviously you want to be able to sell or license, or I want to be able to license the algorithms elsewhere, and I don't want them stuck in MQL5, obscure language that nobody's ever heard of. So we write everything in C#, and then we use an API to send like the actual signals via a messaging service. So yeah, Ocean Blue says, I thought I bought all the Blahtech indicators. Don't know what that is. Yeah, strategy tester is not an indicator. It is actually a tool that's native to MetaTrader. So we didn't code it. It's just a part of the platform. It's kind of like in TraderVate, you have the replay. It's sort of the same idea, right? You can see the previous developments played out in real time as if you're watching it. And then you can control the speed of it as well. They call it the strategy tester. So, yeah.
We got 3 minutes till the market on close order. So
yeah, well, ES is definitely moving already.
Mm-hmm. See if we can get this NASDAQ down to VWAP would be nice. So
okay,
VWAP,
let me drag it out.
MNQ would be VWAP's 276 on the MNQ. On the NQ, it is the same. Yes, 276.
What? Straight bang into the middle of the initial balance.
Yep.
This is also responsive. Huh?
I'm just commenting. Yeah, a lot of people are commenting they did really well today because this works well for what we do.
Yeah. It's amazing. So this is a neutral day as well. So again, very, very good for rod strategy, where you have these extensions on both sides. And again, this is where our methodologies are complementary. My ones, I do have a way of doing these by looking at the extremes of the established ranges and then just using tops and bottoms. But Rod also has his own way of coming up with very similar levels. So, if you watch the markets long enough, everybody comes to a very similar conclusion. It's not going to be like, oh my God, now what? But you have to have a contingency plan and a plan for every type of a day. Not every day will be a momentum day. Not every day will be a range day. So you, as an intraday trader, you really need to learn how to navigate both, not just one. Start with one, But then don't be surprised that if another type of day comes that you're not good at, like I spoke earlier in this session, how I wasn't a particularly good range trader, but I learned how to get better. I've learned how to get a little bit less ambitious with my targets, because that was one of my issues, where I would see the market reverse, I would go in, and then I would expect a huge momentum day. It's like, it's a range day, it's not going to happen. But I started limiting my own profits to about 1 hour, so I'm not asking for too much. I'm aiming more for accuracy over high risk reward on those kind of days. But if we have a momentum day, sky's the limit. You can hold it, and for the most part, if you have a unidirectional day that breaks all of the statistical norms, you have to be able to recognize that as well, and then to hold the trade longer, not just stick rigidly to just one single target. But you still have to have an orientation point in mind. So if your trade is a momentum trade, but you have a value area edge in the middle, that's a potential problem area. And that's a stopping point for whatever kind of momentum trade you might be doing. And sure, you can hold it longer, but you need to know that the value area edge is a high probability reversal trade, or a high probability reversal area. So therefore, holding into it, even if you've already had like a really, really long day, long move, that's dangerous. So then, what's better, to take the profits or to still do wishful thinking and go, well, I think it's going to go further? Just read the market. It really isn't that complicated once you start putting these systematic processes in place. It really isn't. But it takes a long time to get there, especially if you're bumbling around by yourself. Ocean Blue says, do either of you ever watch other YouTube traders and think, what the heck are they doing? I think I've done that maybe a couple of times, but mainly if I see somebody who doesn't know what they're doing, I get annoyed, so then I just switch it off. Rod, what about you?
Yeah, it's been, I made a decision when I first started my channel back in 2019 that I was going to just always take the high road and just point out, how long I've been doing this and how long also I've been helping other people orient and not comment. But yeah, there's a lot of crap out there. Yeah, there's quite a bit.
Yeah.
So, and unfortunately, YouTube rewards a lot of it because it's a thumbnail or it's a big number or whatever, and then it feeds on itself, and these views get a lot of they get a lot of views. So,
yeah, some of the crypto guys, you just look at a car crash developing, and I mean this whole thing as well of them kind of going to the moon. Where are they now? It's like, I've been warning about this forever. I said, guys, don't get lulled into this bull trend, because I've seen this in other markets and other asset classes. It doesn't last forever. No, it's going to go. The whole capitalism is broken. It's going to be this, it's going to be that. We're going to all put all of our money in crypto. Okay. And now what have you accomplished? Nothing. Like nothing. So now I have friends who have gotten involved in this whole crypto, and they're like, D, what do I do? Like, I'm underwater. And I'm like, well, not to say I told you so, but I told you so. It's like, what do you want me to say? Just bail. I don't know. It's like, well, I can't trade for you. And, it wasn't my decision to go into crypto. So from where I stand, some of these guys that have kind of had these big wins, they're now having even bigger losses, and they're doing it very publicly. So, there was a lot of boasting about, oh yeah, look how much money I made. They're nowhere to be seen now. It's because the strategies that they used, the core problem was that they were using momentum-based trades that get rewarded but with that momentum, even though they're using a crappy trade location. Like, I've seen people on crypto longing into clear supplies, like an overhead supply just there. And they're like, oh yeah, long. And this was like when Bitcoin was around like 45 or 47, there was a small correction straight from that supply that was created earlier. And the amount of people that I saw longing into that, I was like, dude, this is a terrible trade location. Like, you do this anywhere else, you're going to get totally slaughtered. And this is not going to go on for that long. And then the same thing happened when they hit 69K. So whoever didn't see that and they were shouting to the moon, where are they now? Nowhere. Now they're like, no, guys, just hold on. Well, how long are you going to keep holding, man? It's like, what are you, Kathy Wood? Jesus. If you don't know who Kathy Wood is, just Google her. So, I'm actually a huge fan of Kathy, but the way she handled her hedge fund going down the drain, it was a little bit comical to me. She just would not admit that some of the strategies that they were using are not that great. So her hedge fund like crashed massively, and then she was like, our research team is one of the best in the world. It's like, well, just own up, just say, okay, we weren't that great on this. Rod, did you hear about Kathy Wood? Did you
I
follow
may
any of
follow
the
all that.
ARC
I mean,
stuff? Yeah.
well, unfortunately, a lot of the time that's just a cycle that repeats itself as well. I mean, when the money piles in at a bad cost basis too, right? You're if a hedge fund gets hot and they go from whatever one x to 10x their capital, and then they have to deploy it all, and then they deploy it all in the same stuff, their high conviction things, and then if it turns against them, they have a whole bunch of their investors that have a poor cost basis, and it just becomes a but I agree. She really didn't own up to, price is truth at a certain point. And there's no difference when you're a portfolio manager with a research team. You still have to manage risk, and they've managed risk
Exactly.
pretty.
Yeah,
They've
she just
managed risk
didn't.
pretty
She was like,
poorly.
no, our decisions are the best. We still stand by. It's like, well, at what point are you gonna cut? Like, how you're watching your whole. This is like career-ending stuff, right? And she's just there. I was a huge supporter of her because she's a woman. She's, obviously I'm hugely supportive of other women traders, but to just stand there, just to go, nah, I still think we're right. It's like, you can't be that deluded. And that's also a problem with some of the strategies that bank on the just tracking the underlying. That's always a risk. Always a risk. Anytime you hold a swing position or a position. So position trading, it's not about outperforming the market. It's just tracking whatever the underlying is doing. So when the whole market goes crashing, you need to have some kind of way to control the downside risk. You can't just watch it crash and go, I don't know. Yeah, we're still the best. So yeah, I just found that a bit weird from somebody who's supposed to be, an authority, and she's got a lot of money behind her. The investors deserved better, in my opinion. But hey ho, it's her hedge fund, so she can do whatever she likes with it, I suppose, if she has one still. Right,
Well,
that VWAP is
they have a publicly traded tracking
company. Yeah,
instrument as
exactly. Yeah.
well. So I mean, it's a whole
Yeah,
different ball
responsibility,
game now.
right?
Yeah,
Yeah.
that's why we like the futures markets, by the way, too, folks. Is that there's a lot of ego in their research, and because it has a name, and they assign a lot of things to, we're going to get Tesla right, this is going to happen, we're going to get Roku right, we're going to get Robinhood right, or whatever, because it's a business and it has customers and it has energy around it, where you'd be better off with, like, you can't get too egotistical or passionate about the S&P. It's not a company, doesn't matter, it doesn't have any management, so there's a lot of great books on this stuff too, that I'm sure many of you are aware of, that just about the downfall of very intelligent people that manage to torch, quite a bit of money. The three
Yeah, it's
arrows
ego.
thing is very different. That just happened too. I mean, those people aren't intelligent at all. They're just imbeciles. So, yeah, as are all the people that lent money to them, including Voyager and Gemini.
There was a very interesting point that I don't think it was in the interview that I did with Trade Day, because we were kind of chatting beforehand and stuff. And Steve actually said something really interesting. He said, I'm more of a swing trader because I found intraday to be very like the amount of consistency that you have to have. He said that was very hard for me. And I found that interesting because that's directly related to the personality, because I'm the exact opposite. If I hold a swing trade these days, I wouldn't be able to sleep. I would be checking it all the time. I would be annoyed that I didn't take the correction, because at this point I have enough skill to take both sides. I don't have to limit myself to one thing or the other. And yet, you have some people who absolutely love the whole swing trading. I can't stand it. Absolutely can't stand it. If I have a position open, I can't sleep.
Interesting.
Yeah, I know, Rod, you have both, and I have a stock portfolio as well.
Yeah.
But I don't check it all the time. It's something that I've done like 3-4 years ago, and that's it. That's just the stocks that I picked. Luckily, I picked most of them at a pretty favorable levels. But yeah, so if I was doing that actively and trying to be a swing trader, it's just not for me these days. I'm much happier doing intraday. All of my positions are flat, and the end of the day, I'm done. How do you? One last question from me, Rod. How do you marry that? How do you marry the position trading with intraday?
I don't really. I don't position trade. I mean, I either have an investment portfolio, which I don't think of as a trade,
Mm-hmm.
um, uh, and then in the futures markets, it's rare, but it's a pretty simple requirement. The position has to be pretty profitable, or it has to be just a really juicy setup where I'm going to manage it as soon as the market reopens, if that makes sense. So I'm not holding things for 3 to 4 to 5 days and moving stops up at 20 handles at a time or anything like that. So
Right.
for me, if I have a very profitable position on that got in originally as a day trade, but there's more room for it to run, and I have a stop that's well within profit, to your point, I don't want to think about it. I could care less. If I wake up in the morning and the market just dropped down to the stop, then that's fine. Also, to do that, you need to have good systems, good computers, good networks, good stuff like that, because a lot of the time, there's a lot of people that think that their orders are always resting on the exchange, and they're not in certain platforms and stuff. So you need to know about all that. But basically, I'm 95% day trader with futures for intraday income, and everything else is either a long-term investment that I don't even think of as a trade, or it meets the criteria where I'm not worried about it.
Awesome. I see A has decided to join us late. So unfortunately, we're about to wind this down because we've been around for 90 minutes. So Rod, thank you again for doing this. Guys, if you want to check out Rod's room, you can find the link down below this video. If you want to learn how to do stuff in a more systematic way and to streamline your processes, that link is there as well. So check out the Market Talkers courses. We're going to let you all love you and leave you. And we're going to do another live Thursday next week. And then we're off until the middle of September. Until then, trade well, trade safe, don't do anything stupid, and we'll see you again next